Hello and thanks for tuning in to Kalkine TV. I'm Rachel and this is the Hot Performers, a show where we take a look at stocks and sectors that could be heating up. Today we're looking at ASX-listed company Cochlear. The well-known medical device maker reported its financial results for the first half ending December 2021. They increased their interim dividend by 35% to $1.55 per share, representing a payout of 65% of underlying net profit. They expect the dividend payout to be around 70% for the full year, in line with its target payout. Factors such as strong sales growth and improved gross margin with some benefit from lower than expected operating expenses have helped the company's case. Let's take a look at how the first half unfolded for the company. Well, sales revenue increased by 10% to $815 million, and that was despite a decline in developed markets and strong growth in emerging markets. The company reported that the sales of cochlear implant units bounced up 7% to 18,598 units over that time. Its balance sheet remained strong with a net cash of $506 million and operating cash flow sufficient to fund investing activities and capital expenditure. Due to COVID cases in the second half, hospitals throughout the United States that serve as Cochlear's largest market for implants ran operating theatres below capacity. Hospitals in the US grappled with staffing shortages weighing on performance. The unit volumes in the emerging markets increased around 30% with a strong recovery from COVID-related surgery deferrals that was experienced across most countries. Surgeries in a few countries, including China, are trading above pre-COVID levels. In developed markets, unit volumes slid by 2%. Though the company pointed out volumes overall are tracking ahead of pre-COVID-19 levels, despite variability across different countries. However, places like India and Brazil are recovering well, although volumes are still materially below pre-COVID levels. As for the company's investment plans for the half year 2022, the company invested $99 million in research and development, representing 12% of sales revenue. The investment in R&D aims to strengthen the company's leadership position through the development of market-leading technology, with many new products and services achieving regulatory approval over the last few years across all parts of the portfolio. Cochlear is focused on driving long-term market growth by transforming the way people understand and treat moderately severe to profound hearing loss through awareness and access activities. During the half, the company continued to invest in expanding its programs for driving growth of the adults and seniors segment through direct-to-consumer marketing activities and building referrals from hearing aid and ear, nose and throat clinics. For the financial year 2022, the underlying net profit guidance range has been maintained at $265 to $285 million. It's a 13 to 22% increase on underlying net profit for 2021. Guidance now incorporates cloud computing expenses and anticipates continuing COVID impacts for the balance of the year. The company pointed out that more material disruption from COVID that significantly impacted sales remains a risk factor that does not form part of the guidance. Yet, despite the ongoing disruption to surgeries caused by COVID, the company assured that it continues to be confident of its hearing implant business over the longer term. It asserted that it would continue its investment in research and development and market growth activities to support long-term market growth, with some acceleration in growth investment. Well, that's all from me for now. We'll be back again with the exclusive Hot Performers stock show tomorrow. Till then, keep watching Kalkine TV for the latest market updates and related insights. I'm Rachel, signing off for now.